Not every reversal signal is equal, and not every trend lasts forever. How do you know when to play reversals or when to follow momentum? This is where the right combination of tools makes all the difference. This video is for educational purposes only and not financial advice. Always do your own research before making trading decisions. This is advanced knowledge, so follow to learn more every day. We start with statistically extreme areas, statistical price bands, and volatility-based SMI, all signaling a potential top, but volatility-based momentum on higher time frames is still up. This tells us that momentum is strong, and fading the move here is risky. Then, the higher time frame VBM up signals go away. This tells us price might no longer be trending and a consolidation phase could be starting. Now, playing the extreme indicators becomes more viable since they are reversal indicators. The first top extreme area comes in, price rejects from the upper statistical band, and VBSMI crosses down from extreme highs, a strong confluence signal for a reversal. Then, we see the first low extreme signal while price hits the lower statistical band, and VBSMI crosses up from its lower band. No consistent trend signals from volatility-based momentum confirm the market is consolidating. As price moves sideways, extreme areas, price bands, and VBSMI continue to work well, while volatility-based momentum remains inconsistent across time frames, confirming a choppy market. By the end, volatility-based momentum starts showing multiple time frame up signals, which tells us that consolidation might be ending, and trend-following strategies could start working again. Trend or consolidation. Knowing the difference changes everything. This is how confluence between multiple tools helps filter the best trades and avoid unnecessary risks. Follow for more structured trade breakdowns. This video is for educational purposes only and does not guarantee future performance. Always conduct your own research before making trading decisions.